Welcome, welcome, welcome. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn with Focus Compounding, on air live with Geoff Gannon. Geoff, how's it going today?
It's going very well, Andrew. How's it going with you?
It's going great. We hope it's going great with everybody else as well. If this is the first time you're tuning in with us, thank you so much for joining us. Be sure to check out all of our content that we push out into the investing universe. The best way to do that is to go to my X at Focused Compound and hit that follow button. Go to focuscompound.com to get access to investment write-ups from Geoff going all the way back to 2005. And of course, if you're interested in learning about our money management services, you can reach out to me at andrew@focusedcompounding.com. So Geoff, I feel like we haven't done a regular podcast in some time. I mean, obviously we did the Berkshire one, but
Yep.
I just how's everything going? How are you doing, Geoff?
I'm doing very well. Very well.
Good. Have you seen any movies at all recently?
I've seen some movies recently, and I will have a couple scheduled.
So I've gone for the past 2 weeks, which I've actually enjoyed. It's an AMC theater.
Okay.
Not IMAX, but they have the nice comfy seats, so it's been a lot of fun. Saw The Fall Guy 2 weeks ago, and I thought it was a pretty good movie, right? I think it was a bomb from the box office. I think they were expecting it to be better than it did, or what?
I think it did what you'd expect for that kind of movie. We talked about that. I think sometimes there's over expectations for that. People think that those two are bigger movie stars than they are with the general public and everything. And it's not an IP thing, so it's not the biggest. Like, you wouldn't do bigger than Planet of the Apes, right? So you want to predict that. The same thing with that. They've got an article there about If, right? Same thing.
Yeah.
You have to have the right expectations for it. So
yeah, I saw Planet of the Apes last week, and
did fine because it's been 7 years since they had one of those, and it probably did similar numbers in nominal terms, which is pretty good because you usually can't wait 7 years to do a sequel and expect that it'll do all right.
Yeah, I mean, I think the franchise is like 57 years old or something like that. It's been around for a long time.
Yeah, but it was 3 cycles. So there was an original cycle with the very famous movie Planet of the Apes. People remember that one with Charlton Heston, and of course the end is very famous. I won't spoil it for anyone, but if you've seen any clips of the movie, it's the very end of the movie that you've seen and what he says and stuff. And then those ran into like sequels that got progressively cheaper and cheaper without him, and some of them are of mixed quality. And then Tim Burton did a reboot with Mark Wahlberg and some other people around 2000, and that one was not so well received because it had a different kind of twist ending and stuff. And then this one, I don't know, was it 15 years ago or something that they originally rebooted this one? And they did kind of a trilogy, but it's been, I think, like 7 years since that, because it was Rise, Dawn, and Battle or something is the ones that they did. But those are kind of prequel type things. So it's kind of been in cycles that they're all not in the same continuity. This one allegedly is in the same continuity, but many years later, so it doesn't really matter if it is or it isn't.
I mean, I thought it was just going to be, like humans versus apes at war the entire time. That's what I thought it would be. And it wasn't. It was apes versus apes. And then, there was some human interaction. But so I kind of had a different guess of what the movie would be going into it. And it was sort of animated, not animated, but animated, the whole time or whatever. So it was pretty good, though. I thought it was a decent movie. I think according to the numbers, I think they actually did better than they had originally expected the first weekend. And
it's the first time that's Disney, because Disney owns Fox now. This is a Fox property, so it probably says at the beginning of the movie 20th Century Entertainment, 20th Century Films, whatever it says, because it used to say 20th Century Fox, 20th Century Studios. It says it right there. So it used to say 20th Century Fox. Disney, when it doesn't want to claim the movie for itself, like this one, leaves that name in front of it as if it's a Fox movie still. This is a Fox property. I think there'll be an Alien movie later this year, which I'm sure Disney will also put that in front of. They won't have a Disney castle and then show you an R-rated Alien movie. So same thing here.
What do you think about the box office? I mean, it's pretty slim pickings until, we still got a few more months until things start to kind of pick up,
No, it's not looking that great in terms of what things people are putting out, right? But we knew that going into it. So you could have so it's different people playing in it, and it's been a while, but Furiosa could be big.
Really?
We'll see. Yeah, it could be big. Yeah. For something that's R-rated and all of that, yeah. I mean, I assume it's R-rated. I didn't check to see this time, but they've all been in this series. Yeah, each one's done better than the last. It's
Is this the second or the third or what?
Well, it's too complicated to explain. It's too complicated. There was a movie, low-budget Australian movie called Mad Max, right?
Okay.
And then the director, this is decades ago, it was one of, it would have been an early Mel Gibson film before he hit it big in the States. And then he got a bigger budget to be able to do Mad Max 2, which I think was put out as like Road Warrior or something in some places. And that one actually caught on in the United States and stuff. The first one I think played okay in the rest of the world, but wasn't a big hit in the United States. Then after that, they did the Thunderdome one, and then there was many years until they did, that's, people probably remember that had Tina Turner and stuff. And then many years later, they did Fury Road, which was a huge hit with like critics and audience scores and stuff. So if you have something like that and reasonably close to it, you put it out, it can be big. So I don't know. We'll see. And you also have some people in it who are somewhat named people for this kind of series. So yeah, they have their names up there on the poster. So yeah, it could be pretty big. I don't know what did Fury Road do? Did it do more than like 150 million or something in the United States? I think it did pretty big. You could probably click on the series. It probably says it. Where does it say that? Franchise. Yeah, if you click the Mad Max franchise, that link where it says Mad Max, you're right by it right now. If you go down a little bit there.
There we go.
What does it say they did? So Fury Road did what? How close to 150 did it do?
Okay, so domestic box office, it did, and this was in 2015, 153 million and 369 million worldwide box office.
Yeah, I mean, I don't know. We don't.
That was in 2015 dollars.
Yeah, I'm just saying it's so long, right? Usually you don't have like almost 9 years between a sequel, but if something is as well liked as that one, you can see it usually does a lot better. If you sequel a movie that wasn't very well liked, then you can sometimes see a big drop off.
Why do you think they like waited that long? If it was like pretty decent.
This is the director. He's difficult to work with. It's all him doing it. He's an old man now. He did all of these himself. I think there's a lot of practical stuff, and he storyboards it all out and everything. And I just think, yeah.
Who's the director?
I think the director's name is George Miller. There was another director also named George Miller. This is, but he's dead or whatever now. But this is is this the one who was a doctor in his previous life? I'm trying to remember. I can't remember which one he was, but yeah, he would only be known for doing the Mad Max things. Do they have under the cast and crew? You could click cast and crew. It'll probably say who the director is. Let's see. Where's director?
There you go. George Miller.
So if you click him, I think you're going to see he really... Oh, no, he did some animated. Did he do some animated too? He's basically done these, though. I don't know if he was involved in some other ones, but on his own, these are his. They're almost like gigantic independent productions.
Happy Feet?
They're like... Yeah, so that's him. Yeah. So he did do some studio movies in between, but like every decade or so, he puts out a Mad Max movie, which, like I said, is like, imagine $150 million budget, but it's like it's like an independent production. You know. So,
speaking of directors, I listened to the Founders podcast. David did, I think, 3 different ones on, or 3 total. I mean, it was James Cameron, he did Christopher Nolan, and Quentin Tarantino. I listened to all of them. I had a longer drive, so I'm like, let's just listen to these podcasts about these directors. And for anyone listening, those are phenomenal podcasts to go and listen to. James Cameron obviously is a pretty interesting guy. All directors are pretty interesting individuals, like very different, eccentric people, you know?
Yep.
Have you listened to
So
those podcasts at all?
no, I've not listened to that. No.
Yeah. James Cameron's interesting because it's his way or the highway. He does not care,
Yeah.
He does not care. And Avatar, what did that, huge
Yeah, he's made the
success.
biggest movie ever made a couple times now, but
Yeah.
he also waits 10 years to put them out. And yeah, same thing. There's probably some difficulty sometimes from some people. Some people like working with him, just like I'm sure some people keep working with George Miller. But
I heard, he talked about David in his podcast that it's hard to work with him, supposedly.
Yeah. Tarantino, I think, is probably a lot easier to work with.
Yeah.
It's a lot more repeat people. Yeah.
What else do we have here? When's the next big hit coming out?
My guess would be the biggest, like we were just talking about R-rated movies. One of the biggest R-rated movies, and probably the biggest movie, I think, is we have. When is it scheduled for? We do have at some point this year. We're supposed to have Deadpool and Wolverine or something like that, right? Have they renamed it? But they've certainly marketed it as being that Wolverine will come back.
There you go, July 26th.
Yeah, so that one could, I don't know. You never know what the biggest movie of the year will be or anything, but that could be. Mm-hmm. That could be. And you have fewer superhero things coming out, certainly fewer superhero things that will play big this year. So if it's going to be something, that would be the one.
You think it's weird that in recent times they've really combined the storyline of all of these superhero characters and looped them into like one film?
No, that's the Marvel thing. So it started with Iron Man, basically. That was their strategy. That was Marvel's actual strategy to do this. And so that worked from, like, let's say 2008 to 2019. And then COVID happened. And, but since, let's see, what was the second one called? Infinity War Endgame? Sure. Whatever it was. The second part of that two-parter. Since then, it has not worked except for Spider-Man. I think we can say now, because it's not really spoiling anything, the three Spider-Men from the three different who played it for different studios, Sony and Marvel and everything, get together in the same movie, right? That team up. So that one also really big, but otherwise crossing over and stuff, not a success. And some of them are ridiculously expensive, right? The poster child for that is the Marvels, that movie, where you combined things from Disney Plus shows with a sequel to a Marvel movie and all that, and it had a big production budget, and it didn't do well. So recent superhero movies haven't made money, obviously. They've all done much less than you would have hoped, and some have outright bombed, I would say. Like Madam Web probably wasn't that expensive to make, but Madam Web is an example of something that didn't do well. And there's some ones that look like, ooh, we'll see how they do. We don't know. Sometimes something sounds like it'll be terrible, and it works out really well. But they've got a Craven movie from, I guess that's in the Sony side of the universe, because they have Sony has some rights to some things, but they don't have Spider-Man, so they can use like Spider-Man characters, but not Spider-Man. So I think Craven, and I thought at one time that was supposed to be an R-rated movie. That would be interesting if that really happens that way. So that would be along the lines of like your Venom and things like that. But they've had very mixed success with the Venom worked out, but the things that aren't actual Spider-Man. Now the animated one got pushed. So they have a part 2 of their it's really part 3, but I think they actually literally call it part 1 and part 2 of the Across the Spider-Verse, right? So they have Spider-Man in animated form, and those movies have been successes. And if they could get that one out, that one would probably do really big money, because the second one did a lot of money and people liked it and critics liked it and everything. So, but they pushed that a full year. That was supposed to be back to back, like 2023, 2024. And now it's going to be 2023, 2025. But, and that probably skews younger and stuff than some of these others. I think the problem with a lot of these is the younger part. It's not clicking the same way with the people who grew up with the superheroes since then. I mean, you now have a generation of people, right? If you assume that when do you start going to a superhero movie? You could when you're really young, I guess. But let's say you're some age between 5 and 10 or something. At this point, Iron Man and the MCU and stuff has been there for your entire time of knowing what pop culture is and everything. So it could be a little superheroed out for the young people. The Gen Z. Yeah.
Interesting. Yeah. This past, was it earlier in the week? Roaring Kitty from Reddit. He posted on X a bunch of different videos, and AMC and GameStop were up just like multiples again, and AMC, they obviously diluted into it. I think they raised, I don't know how much, definitely more than 250 million, I believe, right? But curious to hear your thoughts on that, right? I mean, the podcast topic today is mainly related to microcaps. I guess AMC, what's their market cap? Like 900 million?
Not a microcap.
Yeah.
Are they? Okay, all right.
Something
They're certainly not a small enterprise value company, yeah.
But the question was, could Geoff discuss how he thinks about optimal capital structure, specifically for microcap names that may or may not have access to investment grade credit? In addition to how he would think about debt deleveraging stories that offer more upside via leverage when compared to some higher quality names within the same industry. So kind of just the topic of credit and leverage and debt in the microcap space. But, we're talking about movies, so we haven't really talked about this on the podcast, but yeah, AMC, Roaring Kitty this past week, I guess, posted a bunch of videos. A short squeeze happened. Again, it's not just retail investors like Renaissance Technologies, RIP to Jim Simons. Their 13F came out. Yeah, it just they just track the movement and whatever,
Yeah.
Yeah, I thought it was pretty interesting. They diluted into this, and
if you look at Renaissance, they move quickly, so it's not very well updated. The quarterly things that you see for that could be way out of date and stuff. But even we end up in some stocks that they would end up in, because if something, you just notice certain things about very small, maybe quality, dividend value, and then once it gets any momentum at all, then Renaissance appears in it. So if it's a good microcap, as soon as it starts moving, you see Renaissance in it.
Even NACCO, right? They've been in it.
Is that true? Yeah.
Yeah.
Well, that's really good value for a company that, and they, on things that they can get in. It also has to do with liquidity things, because you don't see it in things that are high quality and even have better markets and things, but aren't on a major exchange or something. Like with NACCO, that's a very small thing to be on a major exchange. So that's where you tend to see it. Yeah.
Any thoughts though? Let's see. So on May 13th, so AMC stock went from like, I don't know, $3 or $4 to it like doubled pretty quickly. And it says that they completed their at the market equity offering for $250 million. Yeah, it's just crazy.
Yeah. I mean, my feelings on it are things people probably don't want to hear, which is that I think it's really important what people are in control and making the decisions about the cap allocation and why they're doing what they're doing, which is not the metrics of how much leverage they have and how they got it and whatever. So like AMC, so when you compare a John Malone company doing this or that to AMC, we could go back to the story of what happened with AMC. So AMC got a CEO who I believe is the same CEO now, who decided to do a bunch of rolling it up by like merging with other big companies, or big enough companies. So you're now down to like 3 of these operators in the United States, accounting for close to half of the important screens in the country or something, But how that happened is some of them bought things. And AMC, one of their bigger acquisitions probably was Carmike, but there were other ones. So I don't know if it was 3 or 4 different circuits that they bought in a short period of time using a lot of debt.
Mm-hmm.
And then, COVID hit and they had those problems. But they're already in a bad situation before COVID in terms of just having too much leverage probably. Now, they are very I remember I think it was a long ago story. I don't remember, but at one point Charlie Munger was telling a story when he was a lawyer or whatever. I think it was when he was a lawyer. I forget if he was talking about a family member being a lawyer of somebody's, but they were back in when it was the 40s or whatever, and the guy owned movie theaters, right? Mm-hmm. And he said, well, I'm down 20% from last year, but it's still a great business. And I'm down 20% from the year before because after World War II, attendance was dropping huge amounts. But it is true that movie theaters are a terrific business in terms of the working capital stuff. There's very little requirement for any actual capital, and especially when you get to the leasing part of it. So in the beginning, they owned like these movie palaces in cities and things, and then there was the drive-through stuff, and then there was the leasing out in the suburbs and stuff. I highly recommend that book about General Harcourt, the General Cinema book, that is a history of that kind of stuff, or reading the chapter in The Outsiders about Dick Smith at General Cinema.
That's the next podcast. So
yeah, okay. So I would recommend those. But if you look at Cinemark, for instance, and AMC is similar this way, but if you look, you could just lease everything. Cinemark owns nothing, by the way. I mean, I literally think they own nothing because I actually lived right by where their HQ was and stuff, and I know they leased all that stuff. So I believe they ran operations out of Latin America with just some leased offices. They leased the space that I saw, which, by the way, also shared the space with a movie theater. So I would go to that movie theater all the time because they would test some things there and stuff because, of course, that's where you show people, someone comes by, you got to show them your thing. So next to your headquarters has to be your theater where you test out all the new things to show, people from the studios and stuff. Oh, look, this is what we're doing for your movie. So I would go to that theater all the time. And it's just a leased thing. I mean, they don't have to own anything anywhere. It's a really minimal amount of office that they need to do to run the whole operation. And the working capital stuff's great because you pay on a lag to the distributor, right? Which you can see in the where you have like where you have like payables or whatever things that you see there, as opposed to the working capital stuff where you don't have to actually carry that much in terms of obviously anything, because you get paid right away by people going in and watch. It's pretty much a cash business that way. It's not literally cash; it's credit cards and stuff, but that's how it works. Mm-hmm. There's a little bit of like a loyalty program that I guess shows up on the balance sheets now and stuff because now they have liabilities for redeeming movies for people because they have a lot of loyalty people. So they get like, I think in Cinemark's case, it's one free movie and it rolls over every month. So if they pay you like $10 a month or something, you get one free movie, but it also rolls the credit. So that does show up as a liability. Yeah. Yeah. But that's a pretty good liability. It's like a blue chip stamps liability. Mm-hmm. Right. Yeah. And the economics of it, like I said, I mean, I know before COVID, Cinemark would buy like 1,000 hot dogs for $1,000 and mark them up and sell them $5.50 each or something, that's like kind of how the food and beverage business is. And then, the exhibition business is, maybe they keep 50%. It's different under each agreement and stuff, but in the United States, it's not a bad idea to think about it, is that they keep about 50% of what you're seeing in box office. 50% goes to the distributor, 50% to the exhibitor. So if we show that something does 150 million in the US, 75 million or so goes to the theaters and 75 million to the distributor. And it's a cash business. Sometimes in the past, it expanded too much too fast. The leasing thing was a problem because, see, when people had to actually buy real estate, even that does slow you down, right? When there was a desire to expand too fast, with basically when the U.S. was going to all malls everywhere, that was a problem. But since then, it's slowed down, and like we said, with movies since COVID, there's less demand for them, right? I think mainly because there's less good supply of movies, and I think that could be an ongoing problem for a while, and we'll see. But that's where I see the problem in the movie business, is definitely the supply side.
Meaning there's too many screens?
No. That might be true, but I think that the film slate, if it was good, the people would be going.
Oh, okay.
I think what's deteriorated, streaming did this. So if you think about it, it's a gory metaphor or whatever. But if you think about it, you have like when you make a movie, right, as a studio, it's like you're butchering a pig or a cow or whatever. It's going to be a lot of different cuts that are sold in all different ways, right? Is how you're going to make your money. But if you're doing this, you're raising this animal from this, you're doing this. It's really the whole process of what it's made for, of all the different things that it could be turned into. The problem is that math has not worked for a while. I think it certainly hasn't worked since COVID. So they're making things that don't make sense that way. If in that General Cinema story, they thought videotape was bad for movies. It was actually good for movie theaters. And it's good because it makes the math of making movies better. They make more movies and better movies because they can make back a lot of money on video. Mm-hmm. You actually have more places you can exploit it. When we had the streaming stuff, we've had it so that it's been more and more not enough avenues that actually pay for it to make enough money on the movie that you make. So what I see, and this is very opaque, the studios don't break it down for you, is that the production budgets and the marketing that you're seeing are too high versus the way that they're going to make their money back, in large part because they're putting on their own streaming things and too fast, instead of having a lot of windows to exploit it. So I've never thought that like the length of the window in the movie themselves matters all that much, but putting it on too quickly, free services, and the perception that it'll go to them, and not segmenting the population so much so that you make money from everything. You make money from those, put them all together in a set, sell them for $20 in a Walmart bargain bin, and you can get all however many Halloween movies there have been now. You're still making money from things that you made a long time ago. It gets packaged together and stuff. Mm-hmm. That contributes all the time to it. Showing it on TV contributes. Putting it on streaming services contributes. Re-releasing it in a movie theater. The Phantom Menace was re-released and made, I don't know, do you know what it was? $8 million? It made some meaningful amount of money for a one weekend release. So that's a few $1 million more to bring in. And then in the past, it would have stimulated sales of like Blu-ray, DVDs, whatever. Now you can go on to Disney Plus and watch The Phantom Menace anytime you want on streaming. But that's the ad for it. So historically, studios didn't need to make any money on the movie release. They did back in the 40s and stuff, but from the 80s to today, they've not needed to make money on the movie release. They just need to use the movies to be advertisement for everything else. If they break even on the movie theater run, they're doing great. Mm-hmm. Now I think the aftermarket is so... It's just, that's what's fallen apart. And so the economics of making movies does not make as much sense as it used to. And so there's not as much... I think that's why you're seeing people slow down and stop on especially the very expensive movies and stuff. And it'll take years for that to cycle through.
Do you think we'll have fewer but more expensive, like production-wise movies, or? That's
been the trend forever. I think that's not good, and that the number of movies should increase and the production budget should come down with greater variety. I think you should see higher variety and stuff. Would be the correct thing to do. But they've been doing that for a long time. If you look, major studio releases are down. I mean, if you calculate it, it depends on how you do it. But if you calculate, say, just major studios, take only things released by the top 6 or so studios, whatever it is in many years, from the 90s through today, what you'll notice is that the amount of attendance even per movie of those major movies has not been decreasing over time. What's been happening is that there's just fewer and fewer releases from major studios. And there's some parts where it dips down in that. And I think that's a big part of it. And sometimes in the past, there was greater variety among the top movies. And I think it wouldn't be bad if that continues. You can see that because sometimes, like, what was it? Was it Anyone But You? What was the name of the one that was came out at the end of last year? Glenn Powell, Sydney Sweeney, whatever that one was. It's a rom-com. Yeah. Mm-hmm. So it's a rom-com, and it's a slight sort of redo on it, inspired by a Shakespeare thing. But that did pretty well. And that's because that's a pretty low bar. If you have somewhat likable people in the leads and everything, there wasn't that... The romantic content stuff has not been as much... You haven't been, Anyone But You. That you haven't been as, So what does it say the production budget allegedly is on that?
$25 million.
Yeah.
So worldwide
And I don't know if
is 8.6 times higher.
And that production budget may not be net of everything because this acts like it's an American movie, but it's really Australian. I mean, they go there and stuff eventually, but even the stuff that isn't is actually looks like it's probably Australia even when they're saying it's America. So if that's true, it could net out to be a lot lower. Like when they do the James Bond things and they say it's $300 million, that's not true. It is $300 million, but remember, everyone that shows up in the movie is paying you for product placement. So Heineken gives you 20 million, this one and that one, so it takes back from it. I don't know if that's net of all tax credits and things like that, but it's obviously cheaper to do things with support from Australian government than it is doing them shooting in LA or something. So that did well, right? And then it also can play on other things. The bar is not very high. The bar became very high for like superhero movies and stuff. So we'll see, but more variety would be helpful.
It does seem like it's the superhero theme is just so saturated.
Yeah, and also if you keep putting out more and more movies, you have a more and more marginal stuff that you're doing. That's sort of the problem with it. I don't know that you can't do a lot of superhero movies if a lot of different studios each had superheroes and they only had a few in production and whatever, but it was always a problem. Like DreamWorks Animation was a public company. And what analysts were often interested in is, are you going to do one movie a year? Are you going to do 2 movies every 3 years? Can we ever get up to 2 movies in the same year? And they were really interested in that. And there's a lot of scale advantages to releasing more movies. But it's like insurance. You don't necessarily want to underwrite worse and worse. I mean, Iron Man was a big risk. People didn't know what that was and stuff. But years ago, the biggest superhero things that appeared, if we go back 50 years, right, the things that they put out were Superman and Batman were the big bets, right, from studios. When you're getting down to Madam Web, who I think is probably a super minor character even in any comic book thing and has no history that I am aware of in pop culture beyond comics, you're just thinking that anything that has some connection will do okay. It's not really any built-in IP to it at all. But yeah, if you put out something that's Superman or Batman and it's at all good, people will show up because they know what those things are. And now maybe that's true for Iron Man or Captain America or something because there was 15 years of them building up those characters in film. So if they put out a rebooted thing of that's really high quality, people might come. But yeah, people can't follow 30 different things. So I'm not saying that if it's not really good, maybe if Madam Web was, one of the best made movies, it would have done better. But you can't put out a so-so movie. It's very execution dependent when you get to that point. So anyway, with AMC, the problem is I'm not so sure about like their leverage and stuff with how they used it for and what they're doing with it since then. And being caught up in the whole meme stock thing, that's, worrying. I mean, honestly, I would avoid things like AMC and GameStop just because even if they were interested in doing the right things for shareholders before, they've been so conditioned by this meme stuff to like issue, to kind of try to get interest in the stock, then issue shares. You've seen that. It's probably warping their thinking on all this stuff.
Yeah.
People would probably look at the debt and stuff. I don't know the story of that with AMC and what is available that people could buy and stuff. But I believe there are bonds that trade, right? There are quotes on some bonds of AMC, I think.
Yeah.
Yeah. So that probably would make more sense. And I'm sure they're not trading at par.
No.
So if there might
Last
be a
time
more
I looked, though,
rational market.
I don't think they were at ready to go into bankruptcy level. So too, but it's been a couple months since I had looked.
Well, we can look at AMC here. I mean, there will be real value for if the company were to ever go into bankruptcy. There is some real value there for bondholders in a newly capitalized business, right? So they may not be holding bonds because they want the interest on it. They may be because they want the yield, but it also could be that there's some floor because they believe that they can recover quite a bit by the fact that there's an operating business here that's okay. Can you look at just like the income statement so we can see before the... Yeah. So we can't really look at cash flow and stuff because a lot of that's being used up. But yeah, operating profit. So what did their operating profit look like before COVID?
It looks like, so I'll just read on from 2014, 179 million, 242, 267, 209, 310, 236, and then 2020, obviously negative 1.5 bill.
Yeah, so they were a bigger company, but never as good as Cinemark. If we can look at Cinemark for the same page, the income statement for those years, you can see their operating income should be higher, I believe. It was more like around 400 or something at some point.
Yeah, it was. So I'll read onward for people listening from 2014, 385 million, 440, 446, 430, 459, 407, and then 2020 negative 591.
Cinemark's the best operator in the United States, I'd say. I mean, it depends. There's others that are parts of other companies that are smaller that might be fine too, but pure play things, Cinemark's the best. So if we look at the overview, we could probably see some idea of how the market values Cinemark. So the market, and Cinemark I don't think is that expensive, right? What's the EV to EBITDA on it? Yeah.
6 times.
Mm-hmm. Yeah, and that's not the best EBITDA they've had. It recovered a lot since COVID, but they're not quite back to where they were before. So the market value, according to QuickFS, the market values their EV at, let's say, almost a $4 billion company or something. There's probably leases that aren't covered there. Yeah.
Yeah, 3.7 billion. Yeah.
All right, and then let's look at AMC. This gets very confusing.
It says 5.2 billion.
All right. So, but subtract the market cap out of it. So, what's the market cap say it is?
1.3.
1.3.
Yeah.
So it says that the debt of AMC then is not worth that different from how the market values Cinemark, right?
Mm-hmm. Yeah.
So I would think that we'll see what happens and stuff, but AMC is a bigger business than Cinemark. Do you have the revenue? What revenue did they have right before? You have it right there, I think, right before 2019?
5.4 billion.
And what was Cinemark doing at that time?
It was 3.2.
Yeah. So it's a worse business. It has not hit the same operating level as Cinemark did, but it is bigger. Mm-hmm. And so it wouldn't be unreasonable that someone would think that the debt will eventually be a claim on a business that looks a lot like Cinemark looks now when it's cleaned up or whatever in a bankruptcy situation or whatever. Not that it's headed to bankruptcy, but I'm saying that might be where you're looking at with the debt is you're saying, okay, I'm comping this against Cinemark. How much am I protected in that scenario? And of course, you have to look because I'm sure they have different kinds of debt and stuff. I'm not saying that. I'm just saying that anyone who thinks that they would be getting, who would be the most senior and stuff might be thinking that way. Yeah.
Have you been surprised that a company like Amazon haven't, come in and, I mean, we don't know if they have or have not, but at least, publicly, like just make a bid for AMC or something like that, or news of that coming out, just because they've wanted to get into movies. It sounds like, Bezos has kind of wanted to, add that to the slate. They have their Amazon Prime and they make their own movies and whatnot. It seems like that would be sort of a natural progression.
I don't know if the whole meme thing is turned everybody off of doing that anyway. And then there's the question of, well, wouldn't I rather if something's eventually going to be in bankruptcy to look at it then? Because you don't want to be involved in something where then other people could come in and bid for it and stuff, and you want it in a more organized way. The other thing is that Amazon, I think, and others like them, even Apple, but Amazon more so than Apple, but Apple too, probably look at it as the regulatory and just political environment and public opinion environment on this stuff has deteriorated a lot. So I think Amazon it would be good if Amazon could have bought like Paramount. It would be okay, maybe, like their acquisition of Whole Foods and stuff, if they could buy an AMC or something. But I don't know. They wouldn't. I don't know that anyone would be happy with them buying a Paramount or being in the running for that. I don't even know if someone would like Apple doing that. I think it's sour enough with Amazon. It would be difficult to happen. But years ago, they would have been better off if they had bought the Paramount movie studio and stuff than having their own operations like they've had. And they could have gotten away with it. Because of National Amusements or whatever, the holding company that holds shares in, for the Redstone family that holds shares in Paramount that are the voting shares, you had this problem of splitting it up into the different pieces. So, obviously people wouldn't want Amazon to own a streaming service now, although back then, who knows, and to own like national TV things that are in news and all that, like a CBS or something. But they probably could have gone away with being able to own the movie studio stuff of it. And maybe if they had promised not to like combine Amazon and Paramount Plus and things like that, they could have owned a lot of that. But that's going back a few years. I don't think that's possible now. I just think there's so much more hostility to that for all of them. Yeah, I think they missed their window on that. They bought it MGM, but yeah. But that's a much lower profile deal. I don't think anyone even knows what MGM was or anything like that.
The casino?
Yeah. But they got like film library and stuff out of that. So I think they can buy film libraries without anyone. If they buy defunct names and libraries of things that people don't know about, or they structure it so that they say it's just the titles, we're just buying these rights to these things, but we're not buying like a whole ongoing company, I think that they could get away with it. But I don't think they can with like doing this kind of thing. And then the problem would, of course, if you're a bidder for any of those things, someone would always say it should be someone else, not you, because they don't like you, gobbling everything up.
Sure. What are your thoughts on Marcus at these levels?
So Marcus is quite cheap, right? Marcus is in the hotel business and in the theater business. It's a pretty big circuit. It's one of the biggest behind the three that we talked about. Has no IMAX. It does its own premium large format stuff, and it's more Midwest centered. They own more of their theaters. Yeah, they own more of their theaters. They have acquired other things like movie tavern and grill, or movie tavern, or whatever it was called in and that expands down into like where I am in Texas and everything. So that is a food and beverage thing. They're generally bigger in food and beverage and better at doing that kind of stuff, a little more premium. They reinvest in their stuff a lot. They all did to some extent. AMC probably the least of them. We didn't even talk about Regal, which had a bankruptcy thing, but Cinemark probably invested a lot before COVID, and then it dropped off. And then Marcus has invested a lot in upgrading all their things. So there's lots of upgraded screens and upgraded recliners and lots of food and beverage. So they're kind of better suited that way than some things for the future. Yeah, but it's a family-controlled thing, so your capital allocations can be what the family decides to do. It's more like other ones. There are a lot of families in this business, but they're not all publicly traded.
IMAX?
IMAX is really complicated if you read the 10K. So IMAX, yeah, I think the future is bright for IMAX. There needs to be more IMAX screens in the United States. That's one thing that
Is that your preferred way to view a movie?
Not really, because the seating is quite bad usually, because a lot of things only have one IMAX theater and they try to cram in as many seats as possible to do that. So it's not the best for that. But I do think the IMAX brand is really strong. And if you just look at what things have sold out, what if you ask what things missed out on some revenue, the thing that really stands out is releases that make a lot of money on IMAX coming too close to each other, so they don't have enough screens. So the obvious one is like Mission Impossible really dropped off because Oppenheimer ended up taking a lot of IMAX screens. You need the IMAX screens for a few weeks that way. I think people underestimate how important that was for the second Dune, because they just report the numbers in dollars, but that's a lot of people going to the IMAX. That's a director that's very, one, you have Dune things, so that kind of thing. Big landscape sci-fi is going to be very IMAX anyway. High production budget movie, and he's very visual, not very dialogue driven director at all, and he's known for that. So after people saw that first Dune at home during COVID or whatever, they said, I'm going to see that second one, I'm going to see it on IMAX. Just like if they see at home Tom Cruise flying off of a cliff or whatever, then they're saying, well, imagine I should have seen that in the movie theater.
I saw it in the theaters and it was epic. And then I also rewatched it with somebody else at home on my couch, and it was definitely a different experience for sure. Yeah. So no, there are movies that I think, you only get a few weeks at most in the United States now to see them in IMAX. Plenty of people in the United States have to drive about an hour to get to an IMAX. I mean, there are not a lot of them around, true IMAX things. And then because of that, it's going to be taken by the next movie pretty quickly.
there's a time of year where there's not much of anything good to play in the IMAX, and then in the summer, it's like you want to be able to have a month to go whenever you want to see it. Well, it's not staying for a month because there's going to be another big release coming out that will take the IMAX. But IMAX, the company, if you read the 10K, is quite complicated. It is not just we license our name and design and stuff for a theater, and then we get a percentage of the tickets forever or something. That would be great if that's what it was. I would be able to just tell you that it's a great company and you should look at it for having a really good future that way. It is involved in all elements of the technology and promoting it, and so that means equipment things, it means designing theaters, it means part of it is also the original part of IMAX, of course, is not the playing to the in movie theaters. It's from museums and attractions where there's like an educational component, right? That's where it started out. So it had, and some of the biggest ones probably around the world are still in places like that you go to some place and it's some nature video or something that was filmed for IMAX that way. So you have cameras that have to be special things for it and everything else, in addition to the screens and the theater design and all that. You can look there's like 4 or 5 or 6 different ways the company monetizes things. If you look, you can see that in the QuickFS results here. Let's see, how stable is the operating margin, for instance? Just look at that, maybe.
It's kind of all over the place. Yeah.
Okay. Yeah.
I could read it for people listening. 21%, 24, 16, 13, 19, 20, and then 2020 obviously it was negative, but then 2021, 3, 2022, negative 0.03 or 0.3. 2023, 14. So it's been definitely very wobbly. And their return on invested capital too is all over. But is that an accounting thing or what?
Well, it's a few things. One, it is what I said, which is that the mix is really severe in terms of where they get the sales from and what that looks like coming down in terms of how the profitability is. Even things like free cash flow are not very high quality compared to other things that you see there, right? And so you don't have a really high quality of earnings that way for something that's growing as kind of slowly as it had been before. But what's the growth been coming out of COVID, for instance? Just revenue growth.
It's been a lot. I mean, they're back to basically, as of 2023, back to 2019 levels, but 2020 was 137 million. But out of that, 2021, 255 million, up 86%. 2022, 301 million, up 18%. 2023, 375 million, up about 25% from 2022.
And what's important about that is IMAX, in most of the ways I'm talking about it, they get money from different things, but they're more on the CapEx side of the industry than on the side that's seeing the demand now. So generally, if you look at theaters, that stuff is super weak and has not recovered to the extent that even the actual exhibition business has, right? Because we're seeing that these are all financially stressed companies. Some of them have been in bankruptcy or will be in bankruptcy. Even something like Marcus did, like a convertible at one point, that could have potentially diluted them. So they had to raise money. Their stocks went down to not very good. They've cut things, even when I said with like Cinemark, if you look at their EBITDA and everything, yeah, they're more efficient and they've done things to get it so that they're hoping they can make the same or more money than they did before COVID on, in real terms, not as good attendance and stuff. So the fact that IMAX has been doing so well in a part of the industry that's probably not very good is because of what I'm saying, that I think the trend would be this is potentially very strong if you're looking out 5, 10, 15 years. Yeah, this is the part of the industry that I would think is where a lot of investment makes sense. But I'm not going to tell you the business quality is as good and as simple as like a Cinemark, right? If I could predict that the increase in revenue at Cinemark would be what it will be at IMAX, then I'd tell you to buy Cinemark, because that's going to drive really good earnings and free cash flow and all of that. I don't know that this business is as good. There's some things in technology for filmmaking and everything that have been really good businesses, and there's lots that have been adopted throughout the industry, sold a lot of things, and haven't made fortunes for their owners.
Remember 3D?
So I'd say
putting on the glasses in the theater. Yeah, I remember that.
Yeah.
I think I saw like
So
one
that's
3D film, and that was basically it.
Yeah, so that's, about 15 years ago, I guess you had Avatar or something, and that was the cycle in 3D. Now, there have been cycles before. About every 30 years, there have been a 3D cycle, so that was probably the third wave of 3D. And it had premium tickets, and there were some things sold for it for a few years, and then it really dropped off.
Yeah. Interesting. Cool. Well, I want to thank everybody so much for tuning in with us. We are going on 50 minutes. So we're going to dedicate the next podcast to talking about the capital structure, because I do think it's a good topic for microcaps and how you think about it, debt and leverage, all that sort of stuff. But I want to thank everybody so much for tuning in with the both of us on the Focused Compounding Podcast. If this is the first time you're joining us, be sure to hit that subscribe button wherever you're listening or watching us. And if you want to get access to everything that we push out into the investing universe, best way to do that is to follow me on X at Focused Compound. I want to thank everybody so much for all the support, and we will see you in the next podcast. Take care.